Hi, everyone. Today we're going to go over a long form version of our Porta Potty rental company from this week. It's about a 50-minute review, and we go over some following topics. Let me see if I can pull those up. Yeah, here we go. So, company overview, market size, financials and valuation, comparable companies, defining what the company does, how do they make money, who are their target customers, and what are their segments they go after. What are some investment highlights? And then some of the downsides. What are investment concerns? What are some licenses requirements to consider? What are the reasons for bankruptcy and failure? Then key operational items to look over. So, there's also our 14-page investment memo here that we'll kind of click through with folks, but it's based on this review for a portable rental company in California that's asking $10.5 million and throws off $1.7 million in cash flow. Also includes $1.5 million in inventory. So, great business to be in. A lot of really happy porta potty owners out there, and hope you like the review. Let us know any comments. Hey, everybody. Today we're going to do another after the review based on our post this week on the porta potty rental business. So to start, let's just do a quick review of the 1-minute overview, and we'll go from there. Today's boring business, one of my favorites, porta potty rental, cash flowing $1.7 million a year. Today's company is based out of California. Starting with cash flow, the company nets $1.7 million a year or $141,000 a month on $6.4 million of gross revenue. That's a 27% cash margin. What does the company do? They rent porta potty restrooms. They work with construction sites, concerts, and also sporting events, and offer temporary fencing solutions as well. Sellers here are listing at $10.5 million or 6.2 times cash flow. Multiple here is significantly higher than the 2.5 times for service companies on Biz Buy Sell. If you finance with an SBA loan plus a pari passu conventional loan, $1 million here will be your 10% down payment from yourself or outside investors. At this high multiple, your deal will fail to pass the DSCR required for lenders. For investment highlights, I've never met someone in porta potties who doesn't love the business. It's been in operation for decades, the owner's retiring. For risks and concerns, obviously a really high multiple. What's the California regulatory environment? What's the replacement cost for your $1.5 million in porta potties? Disclaimer, please do your own research. You can lose more. All right, there you go. So there's our 1-minute overview quick, just to refresh everyone, and then let's jump over to our investment memo. Here's some of the highlights and risks that we highlight in the video as well, just in case you want a summary. So here's our memo today for the porta potty business. And again, I've met a lot of folks in this space who really like porta potty rentals. I've talked to some lower middle market private equity firms, some individual buyers, and in general, the thesis with porta potty rental companies is you're dropping off equipment that often, is there for a long time, right? I think in this market, if you look at some of the metrics, up to 45% of your customers are really going to be construction customers in this space. So what happens is you often have a job site that's set up for, call it 12, 24 months, 6 months, and you'll drop off these portable restrooms and, they'll sit there and you collect, a few $100s a day or whatever the rate is in your market for that porta potty. Now, the downside here, obviously, is it's a shitty business, if you will, and hopefully it doesn't get me in trouble for cursing. But, when you think about porta potty rentals, you're cleaning out poop from people that leave a mess, right? We're actually out in California this spring and we did a hike, and hopefully it wasn't this company, but at the end of the hike, there was a porta potty that was destroyed. And by destroyed, I mean it was very full inside and there was paper everywhere. So clearly this hadn't been serviced properly. And it can be a very operationally heavy business in that sense. But from an overall cash flow perspective, you're dropping off equipment that sits there and collects money. And generally it's pretty cheap to replace these things. So, really interesting industry. Again, a lot of folks that you talk to will have a really good experience with this. I talked to, again, a lower middle market individual I talked to. They have a portfolio of different companies in this space. They own a small porta potty business that throws off about $750K to $1 million a year, and they're clipping, 35% margins pretty easily. And they've had a really good experience with it. So there's also a lot of buyers in the space, which we'll get into in this memo, but there has been a lot of interest. So that's why you see a higher multiple for today. And we'll get the numbers as well. So here's our 14-page memo for today that we put together. Again, we use our AI prompts from our school as well as our quick pre-LOI model to help you get more reps, right? In this stage, we're trying to populate as much of this stuff as we can to look through quickly and understand, okay, here's where I stand with this deal. And also from a financial perspective, does it actually paper, right? So for this one, you might be really interested in the company, but if you do our quick model here and you see, a 6.2 times multiple, it might not be for you, right? Anything over sort of 4 times SDE in this space gets a little bit pricey once you start to do the math on the lending. And we'll get into the numbers, but the idea here is to, get volume, right? When you're searching up front and trying to find companies, a lot of times folks will get really keen on one deal. And the problem with that is, even if you get these companies under LOI, up to like 50% of these things don't even work out, right? So you want to make sure you're seeing volume here on the front end and doing as much analytical work, leveraging AI, leveraging our tools to get the numbers down, get a basic framework, and then also get a basic idea and outline, right? So here in these memos, we'll go through market size, financials and valuation, comparable companies in the space, what does the company do, who are the company's target customers, investment highlights, and then some of the downsides, investment concerns, licensing requirements, reasons for failure, and operational challenges and items, right? And here on your downside, you really want to spend a lot of your time. A lot of folks will look at deals and project everything up and to the right, and everything is going to be great. But if you talk to some of the accountants in this space, you talk to some of the operators in this space, that's often not the case, right? Your first 6 to 12 months are really the hardest when you first take over these companies. You might have a little bit of a lower debt number there in terms of, how much cash you're getting back. Someone might leave in terms of customers or also your labor force. So there can be a lot of blips in those first 12 months. So you really want to plan for the downside when you're doing this work. And these memos, I was in private equity and M&A for a long time. And, more on the private equity side, I wrote hundreds of these things, thousands. But, when you're writing a 14, 15 page memo, they take a lot of time. And this was sort of before the AI world came out. So now if you use the right prompts, is this all the best stuff to read through? No, but also it's a really good tool because it's sort of what we call the quick and dirty version of it, right? It gets you a nice output of everything and helps you look through. So again, these are all, posted in our school for our community, folks that have joined. And thanks to those who have joined. I'm definitely new to this whole social media world. So it's been good to have folks jump in, but let's jump into it. So, quick overview on the industry and the business itself. The owner's retiring here. There's a team of well-trained employees, and they'll give you some basic estimates of the market size, of the overall rental market in the U.S. And that you can take for what it's worth. It's from the AI, so that some of those numbers aren't great, but much more the qualitative stuff we'll get into, and that's why I use the model to make your assumptions. So again, here's an overview, and we talked about in the short review. We reviewed those numbers, but this company's throwing off $1.7 million a year in cash flow, or SDE. And then you can kind of skip over the market size if you'd like to. Again, these sizing numbers are usually taken by the AI from third-party sources. But again, you can click through those below here, and that's the good part about what we use. We use Perplexity generally on these investment memos. OpenAI and Claude are great too, but what Perplexity does that's nice is they'll provide a write-up for you, and then below it, they'll give you a bunch of articles to read through, which is just a quick way to pull a bunch of articles and read through. Like, I didn't know about porta potties. Let me, click through here and learn. And it'll also give you this, which is your primary users, right? So, key demographic data, which is important. So if I think about, the market here, as I said before, they're estimating here 55% of the market is construction. So you're really selling to a lot of construction companies and building projects. And while the construction companies are often working on project-based revenue, if you have a construction company that's constantly working with you and has jobs, you are drafting off project-based revenue as well. So the longer contract you can get here, the better. If you get a contract with a municipality, that's awesome, right? If a government or local government wants to pay you for some sort of 3-year term to put porta potties in the local park or downtown area, and you're sitting on a 2-3 year contract, that's great. And I'm sure some of these construction companies also, work on that. Other places that it's used, event organizers, recreational facilities, right? So you think of event organizers, that includes weddings. Everyone's been to a wedding where they have, ancillary and additional porta potties in the back to take a leak or go to the bathroom, use the facilities. Recreational facilities as well can also have them. Concerts and festivals, those would be more pop-up style. events, but if you work with, for instance, a local summer concert venue and you have your porta potties there all summer, you can charge a premium for that because it's, short term. And, again, a lot of ways this works is you have to apply a margin to the overall rent price you charge, right? So if I have a porta potty company, I tally up all of my overhead and my labor and my costs, and I, apply a nice premium to that. And that's what I charge my customers. And that's how this space generally works in terms of economics. Also here, it notes some things about the industry. So there's been a heightened awareness of hygiene, sanitation standards, and, disaster release efforts, healthcare. So they'll flag some things like that for you. Here, I'd really focus on the hygiene and sanitation standards because some of the stuff you can throw away sometimes, but focus on the big points because, again, it's the AI and it's not there yet. But by next year, who knows? But here, for hygiene and sanitation, you don't want to have porta potties that leak. You don't want to have porta potties that folks aren't clean and they can get sick, right? There can be a lot of liabilities for this kind of stuff. And then also, where do you remove the waste? So you have to have a good understanding here of your vendors and suppliers. But one thing is your facility of where do you actually take out all of the waste, right? Where do you get rid of all that stuff? Going down here, so primary uses we covered. And, again, there's a bunch of articles that they pull automatically. So, you traditionally as an analyst or a private equity associate, you have to research all this stuff for your boss. This comes out in 30 seconds. Moving to the financials here, section 3, the annual cash flow here, 1.7, obviously a great number in terms of those who are looking for a little bit bigger buy. Great monthly cash flow, on 6.4 million, a 27% margin on SDE is very, very strong, especially for a bigger deal. Anything kind of 15 to 35 or 20 to 40% on the SDE side is interesting. So it's on the higher end there for a bigger deal. Here's where you get a little tricky. It's $10.5 million and the ask price is, a 6.2 times multiple of that cash flow number. That's steep for those who are trying to use a lot of leverage. We use a very standard structure here where we include a 10% equity down payment, a 10% seller's note, and 80% SBA debt. Every deal is not like that, right? If I'm a private equity individual and I have a fund, they're probably putting maybe 40, 50% equity into the deal and then taking out, 50% leverage. So in that sense, they're a much more modest buyer than a lot of the SBA buyers because they have that's just how they're structured, right? So the way they get their debt in sort of that, 1 to 5 million EBITDA, $5 million plus is underwritten very different than the SBA instrument. And again, that's one of the benefits of the SBA is they're extending a ton of credit to you to, encourage small business buying. And as a result, you have this great leverage tool and you're buying companies that are operating companies as if they were almost real estate. But on the downside, once you start to get into these ranges where private equity firms play, this multiple might look very high to you, but to them on an SDE basis, they can have a way better conversation sometimes than you in terms of what price they can pay, how much cash they can put up, et cetera. So, it's something to keep in mind. And then here we just pulled a comparable company set of service companies for 2.5. Service businesses are 2.48 and the general companies on BizBuy seller listed at 2.49. So 2.5 is sort of what they list in their comps for data. This company is obviously much larger than this median sale price here, right? So this is on a $300,000 average company, and we're significantly larger here. So in that stance, when you are looking at these numbers, make sure to look at the median sale price. If you're a lot higher, you're probably going to have a higher multiple, right? So as multiples go up, from, we have a post again in there about multiples, not to get too long-winded, but, they expand over different segments, right? So under 250K is going to trade very differently than 250K to 750K on an SDE basis. Over $1 million is going to trade on EBITDA and trade a lot differently than under $1 million. Anything under $1 million generally trades off SDE. As you get above $1 million, it'll trade on EBITDA. And then here, again, these are AI outputs, and we put that in disclaimer. Like, this is made by AI. But what's nice about this is you don't have to go find all this information and type it out. I mean, it's a pain. So this is, again, a great way to just do quick research and institute some AI to help yourself, because when you're an individual searcher or you only have a few partners or whatever it might be, a small group, resources are limited, time is limited. So the faster you can do this stuff, throw it into a document, the better. And, we have our prompts out there for those who need it. So here, what does the company do? Just defining a longer list of our short form video, but we're going to go over here, and kind of cherry pick, right? So not all this stuff's great, but let's find like the most important things. Okay, portable restroom services. Obviously, that's their number one thing. And a lot of times, number one will be the most important thing. So events, construction sites, we covered that. Locations lacking permanent facilities. There's a maintenance service to ensure cleanliness and functionality, right? So you have an upfront probably fee, probably have a rental fee, ongoing maintenance services. Those are good recurring fees that you want to look for in a business to supplement any sort of project short-term rentals, right? If you're doing a lot of weddings and dropping them in over a weekend, picking them up, that might be, your higher premium project-based stuff. And then if you're working with a construction site with a 24-month working site and you can collect, revenue over 24 months, it might be a lower price point. But again, it'll be nice, steady, recurring revenue and contracted revenue that is there. And then you can charge additional fees for maintenance. Revenue generation from standard rentals. As we talked about, these are kind of the breakdowns of different kinds, right? Luxury or specialty rentals or high end or short term. So again, the difference between a standard rental for a construction site is one of those cans that you've seen a million times. It looks like one you've seen at a concert, or you've waited in line at a big game. They have the one door and the little white top, right? And then if you go to luxury specialty, that might be one of those larger sort of 3 carriage types with 3 different doors to go in. And when you walk inside, there's maybe a few units back there, a nice sink, place to wash your hands, and you definitely can charge a higher premium for those. So you have 2 different kind of revenue streams there in terms of luxury versus revenue. Talked about maintenance services. Event packages, again, we also touched on that, but if you're delivering for a wedding, you would charge a higher price for a festival or a short-term thing versus a long-term construction site, and that's part of the pricing model here to understand. This company also works in temporary fencing solutions. So this picked up this from the listing that we popped in here. But for this example, these folks rent to a lot of construction sites, right? Obviously, as we mentioned, construction sites are a huge part of this industry. So what they've done is added a secondary revenue stream here for fencing. It probably just made sense for them, right? Hey, we'll set up your porta potties and we'll set up the fencing around your site and you can go build. And a contractor, construction person's like, great, I'll sign here as long as everything's reasonable. And you can build those relationships over time. And the benefit of buying a company here shows up because instead of starting from scratch and me going down the path of buying a handful to a dozen porta potties and trying to go find construction sites, these folks have been doing this for a long time. So we'll talk about the downsides here. They're in California, which can be tricky, but they do have a lot of relationships in place. So the benefit there is day one, your marketing and new customer acquisition is not on your plate as an owner operator, which is a big deal. So you can really just focus on operating the company, get the keys, make sure nothing's broken, slowly make tweaks over time. And you don't have to worry about this big customer acquisition push when you first start the company. Long-term contracts, we mentioned that before. So if you can get, extended rental periods with municipalities, governments, longer construction sites, that's great. You also have some shorter term stuff, which you want to do as well, but the longer term stuff is really what'll feed you and as a business be recurring revenue and recurring cash flow. There's some upfront payments, probably for installation. And here, this is where the AI can start to get a little swirly, right? Credit card payment options and graphic expansion. Okay, it's fine. And then here, this is the great part. So all of a sudden you want to do a deep dive after you've read through everything. Perplexity just pulls everything out for you in terms of different articles with sources. So you can just flip through quickly and, read all these different articles that are in there. Next category is number 6. Who are the company's target customers? And again, here it's, third-party AI. So some of these memos will look good, some are bad, but the ability for the AI to kind of lay out 10 options is great for you and pick 3, right? So we'll go through all 10 just so we can give you our different take on them, but just a way to look at it since we're in the long form, we have time. Construction companies are your main go-to, right? They're the main primary customer segment. And you have to comply with health and safety regulations. Just keep that in mind for everything with something like porta potties. And that's why it's nice to read through these. right? If you're, again, any leaks or problems disposing of stuff is on you for liability, and that's definitely an important part of this. You want to dig into that as you're doing your research and as you're doing your due diligence. Due diligence is just about, researching as much as you can, and we now live in an age where you can look up pretty much anything. Event organizers, that's concerts, weddings, sporting events, anyone who needs porta potties in, mass. Municipalities, local governments, these would be great. Parks, public events, as we mentioned before. And again, you got to make sure everything's up to sanitation standards, especially when you're working with government. They're going to have a little bit higher requirements sometimes than some of these folks. Recreational facilities, so you can go out and pitch campgrounds, outdoors where, you might be in the woods. They don't have access to plumbing. As a person who likes to be outside in the woods, if I can, there's some campsites you'll run into. There's a porta potty there. Film production companies, if I'm shooting a movie, right? Sometimes you'll walk around New York City and you'll see a movie set and there'll be a bunch of porta potties lined up. Those can be longer or shorter term. Again, so you want to make sure you're digging into the contracts there, but another segment to pitch. And this is how you can kind of start to make your business plan, right? What kind of customer book do they have? How much is construction? How much is event organizers? How much is municipalities? And do what they call a revenue mix and understand, okay, well, most of my customers here are event organizers. That might be tough because that might be operationally heavy where I'm going in and out of stuff over a weekend. But if they have some weddings and some sporting events and festivals that are recurring every year, well, I can book out my porta potties for those days, and that might be different. So, that's something to think about within event organizers. But on top of that is how much is construction, how much is event organizers, municipalities. If you find one with a bunch of municipalities, it's probably great, right? Because municipalities and government contracts are usually typically longer and they don't like to change stuff. So they're built into a budget. And if they have a bunch of 3-year contracts with municipalities and hikes and stuff like that, that's great for parks. Also below here, disaster relief organizations. There's obviously been a recent pretty bad hurricane in the U.S., and not to harp on that, but there are plenty of organizations that have to respond to emergency situations and humanitarian crises. This might not be your biggest moneymaker, and maybe it shouldn't be. You're not trying to price gouge, and maybe it could be something you offer as a social element to your business, which would be kind of cool. You still want to make sure you're covering your costs, I'm sure, as a business owner, but it'd be kind of cool to roll into town with a bunch of free porta potties when something goes wrong. Right. So, something to consider about, because that's your business and your brand, and you can absolutely do something like that. Agricultural options. If you look at farms and, agricultural events, if you're way out there, maybe a farmer wants to put, a can out in, one of their cornfields or something where they're really far from their house, and every day at the same time when they're doing their work, they want to stop by. And then, healthcare facilities or clinics, real estate developers, if you're doing a big build, again, it's kind of like construction, and transportation hubs, airports, bus stations, train stations. So these are all, with flex pricing. But again, the tail end of these things generally start to tail off. You're really going to focus on the first few for a lot of these prompts. And then again here, just a bunch of great articles to go through. So let's go to investment highlights, because this video is getting a little bit long. Don't want to be too long, but here's the investment highlights, and then we're going to the downsides. Right? So focus on the highlights. It's good to highlight for your business model and look at it, but then really spend a lot of time on the downsides, because you want to think about what could go wrong. The seller is going to list the price at the best price possible. Similar to a house, if you're listing your house, you list it at the highest price you think you can get based on the comps. And if the brokers, if a house broker is getting a little greedy, they might list a little higher than market. Same thing here. So you just don't know. But the highlights are going to help you build your business model and your case, right? Your business case going forward, and think through, like, why would I buy this thing? And then you'll get to the downside. So, take some time to go through it. Here, they're an established market leader. They've been around for decades. They have resilience and adaptability, right? In terms of they've been through multiple market cycles, right? So they've been through recessions. It's a recession-resistant business. People always need to go to the bathroom. So it's a thing. It's a service that is always needed. And, they're established, meaning you don't have to start from the ground up. You don't have to start day one and do everything. You're walking into a business, and really the deal with these SBA deals is you're taking out a significant amount of debt, and you're personally guaranteeing that. So as a new purchaser of a business, your goal really is to pay off that debt for the first 5 years as much as possible, and make sure the business runs well and everyone's happy and your people are taken care of. Which is nice about that is you don't have the other side of going out and striking brand new deals in a market you've never worked in before. You have established contracts in place that you can talk to and work. And maybe there's customers in the book that aren't talked to as much that you can uncover and poke around a little bit and get some new sales. But there's all sorts of ways to work an established market leader. Revenue generation. So they've generated 6.4 and 1.7. The financials work. They have a diverse customer base. As we mentioned before, they're going to list off those different categories we mentioned before. There's a growing demand. All these things are going to say there's a growing demand just when you look through them because the AI pulls from these reports. But it's a much larger market than they posted up front. So you probably check the two sources. But just to show you, this stuff is kind of throwaway. Here's good stuff on the bottom. Recurring revenue model. So you have long-term contracts with construction companies, event organizers, and you want to get predictable cash flows, right? So again, that comes down to the revenue mix, but the long-term cash flows of these companies generally are pretty steady, and that's a good thing when you're in this world, right? You want to try and avoid project-based stuff as much as you can, unless you feel like you have a real expertise there. Expansion opportunities. There's ways to expand geographically or new markets. There's an experienced management team. That's a big highlight, I would say. Having a management team in place is big, especially with something that you haven't run before or you have a lot of experience and you don't know the business. It doesn't really matter, right? There's someone closer to the business than you. So even if you're extensively trained in porta potties or not, one question we always ask is there a number two or someone that can help be a president or a GM in place that sort of wants to step up, have some upside in the business maybe, and take on more of a leadership role. Some folks don't want to, and they want to keep working in what they do, and everyone likes a raise, but a lot of folks don't maybe necessarily want to run the company because it comes with a lot of responsibility and stress. And so that's a good conversation to have. And the benefit of having someone step up that currently works there versus going out and hiring someone new is they generally know a lot about the business and what's going on. We talked to an individual searcher who was working on a company for the last couple of months, and they've been in cahoots with the number two quite a bit, not in a bad way, but in a way of the owner's older and on the way out. And doesn't really have the energy to do stuff. So he kind of gave them the blessing to, hey, go back and forth on whatever you need to figure out something that works for you two. I trust you as the new purchaser. You seem like a good person, and I want to say my business. I trust my person on my team because they've been around forever and they know everything. That's a nice pairing and a good warm handoff. If you don't have that, that's one of your things to list on your cons list of your pros and cons. You have to hire someone brand new to run a company, and can be harder. So just something to consider. Technology advancements. This will be big. I think you want to take a look at their capital or their technology stack, understand what their booking system looks like, understand how do they track different SKUs or identifiers for the different porta potties. How do you know one's out in the field? How do you know one's home? And this can go two different ways. If they have a really good system, great. If they don't have a really good system, it can be good and bad. If it's so bad that you could never manage it and it's all in the owner's head, that could be a problem. But if it's fixable and with a very simple software solution, you don't want to, over promise like what's going to happen, but sometimes it can cause a lot of problems in the distribution. So let's say you're finding a business and you dive into this one under NDA and they come back to you and say, well, we never really had a system to monitor this stuff. I'm sure they do. They're pretty big, but if they don't, that could be an improvement area, right? So if you have, a crew of people working for you here, and all of a sudden you give them a really nice, slick way to track all this stuff, and it's not, overly priced. You don't want to spend a bunch of money when you first get the company in place. Those folks will then really appreciate it because it'll make their lives easier and give them more output time, right? So if their job before took them 6 hours, now it takes 4, they'll be happy, and you'll have an idea where your porta potties are. Sustainability trends, another one. Specifically here, you want to look at these and kind of question them. This is something I wouldn't really highlight maybe. This is kind of trying to say there's an increase for, environmentally friendly solutions. I don't know how that would be a highlight because, this stuff is generally kind of hard to deal with, but maybe if you can brand it in a green way, and there's green stuff in the porta potty world and non-green stuff that you can say we're better than those guys. But again, the bottom of these things tend to get a little wonky, but here's a good one. Strategic potential for acquisition. So if you buy this thing, these companies trade all the time. They're hard to find. I can't find porta potty companies, right? I found 2 so far that we've kind of put up there, and we've cruised through a bunch of other ones because, like I said before, business owners really like owning these things. So a strategic acquisition potential here if you think about that, if you buy a company in, let's say, construction that's super hard and niche, and you have to have a certain focus and it's project based, those companies can be hard to sell. There's a lot of equipment involved. There's a lot of, specific focus and industry knowledge needed. There's a lot of project based revenue. So when you go to sell that, there's not a bunch of private equity firms lying around. When you think of, for example, HVAC, there's a ton of private equity firms above market from us buying HVAC companies. So if you get in a spot someday where you grow the company, you can sell it up market to someone and you can make quite a nice multiple for yourself if you increase the business. And even if you don't increase the business, let's say you fail, if there is a natural demand there in M&A, that is a great highlight for you because you have some downside protection in a sense. Even if you run the thing into the ground, but maybe you can kind of recover it and it, comes out somewhere in the middle, there's people that will buy that off your hands. So you don't have a zero on your hands. And that's important. There's some industries when you look at, and look, they're just not very strong in the M&A space. There's not a lot of people buying or selling them. And that's okay too, because you can buy that thing and run it forever. But just know that and consider that when you're doing your underwriting and you're doing your due diligence and think through, okay, if this thing goes, way down, how's that going to look on the other side, right? Can I actually sell this thing on the downside if it doesn't do well? And if it does really well, how does that work out? And here's some great articles. I really want to read that one, actually. A Land of Monopolists, from portable toilets to mixed martial arts. So, here's some good stuff in here, though, to read through. Again, industry stuff, and we'll keep rolling because we're at the 30-minute mark, so almost done. Number 8. So now we're going to get into the downside. So for concerns and risks, regulatory compliance risks. It's probably the biggest thing you have to deal with, right? They're subject to strict health and safety. This is, toxic waste you're basically dealing with. If you don't comply, you can have fines, legal fees, reputational damage. These folks have built up a nice reputation, so you don't want to ruin that. And it's definitely something to dive into and really do a ton of research on. What do I have to, know about porta potties in that space before I buy into this company? Market competition. A lot of the SMB companies, they talk about moat. There's not really a ton of moat in this world for any of these companies. Any kind of service company, someone else can come along and do some price cuts. There's a few that have a moat, in terms of their customer reach, I would say. So like a porta potty has a solid moat, but again, everything that's a service business and sort of in the SMB world is really up to, price pressures, margins. There's that old famous saying from Mr. Bezos of, your margin is my opportunity. So someone can always come in and try and price cut you, and be ready for that. Any kind of business you buy in this space, whether it's all the way down to cleaning, or if you look at pest control, or you look at HVAC, right? Someone can drop a flyer on someone's doorstep, pitch a lower price, and steal your customer. And that's just part of it. So, prepare why you think you have a good hold in terms of market competition. And again, this goes down to here for porta potty specifically. If you're doing a bunch of weddings, right, that might be hard, where, each weekend you're pitching a new person. Now, if you're with the venue, that could be good, right? But all of a sudden the venue gets a pitch from someone else, they might drop you. If you have a construction site that constantly has 12-month, 24-month contracts, that could be your wheelhouse. And that's something to break down, is what kind of competition is around you in that market specifically. Economic sensitivity, this is a economically resistant business in terms of people always need to go, like I said. But your customers, if you're selling to mostly construction, people are always going to get married. But if you're always going to construction sites, all of a sudden construction slows down in your area specifically for whatever reason at some point, it can really hurt the financials. So, depending on what's going on in the local market, you want to take a look at, their revenue numbers the last 4 or 5 years as much as you can, and try and spot where you're buying this company, how much growth have they had, has anything been impacted by, the slowdown in or the recent construction market, and going forward, project out, okay, if there's a downturn and I lose 10% of my market, what does my projection look like if I lose 20% of revenue, 30% of revenue, 10% of revenue, 50% of revenue? Just go as ugly as possible and figure out what those numbers look like for yourself as you're having these conversations. And that'll help you, understand what you can offer for the business. Operational challenges, mentioned this before. If you got to move these things around, drop them off, depending on your revenue mix, that could vary greatly. But, if you have peak demands in summer, for example, let's say you're a big wedding porta potty company and you have, 4 weddings back to back in all of June, and then, one can breaks and someone else needs one, and it's just a lot of work. So you got to make sure operationally, you can handle all that and understand what they're doing. If you're long-term construction stuff, dropping it off, that's great. So the longer term stuff here, the better. Technological advancements on the downside here is referring to capital expenditures. So if you need to put a bunch of CapEx into the business to update stuff for whatever reason, because things change, same with environmental regulations here. These two kind of go together. It's, if you're spending more money to upgrade these because there were changes to the rules and regulations or changes in technology. Dependence on key customers. This is always a big one. Customer concentration, anyone over 20%, 30% of revenue, you want to take a look at, right? Because especially with a business that relies on long-term contracts, if all of a sudden your revenue drops off a cliff by 30% day one because a big contract leaves, you're in trouble. So key customers is a huge one, especially in the SMB space. Seasonality of demand as well. If you are a big construction company and you're working in, I don't know, Boston, for example, or Maine, or up in the Northeast or Minnesota, colder areas, and you're really probably not going to see a lot of outside construction, or probably less construction in the height of winter, right? So something to consider. And if you're a summer-based, wedding season renter, a lot of your revenue could be in the summer. So you want to take a look at the seasonality in the books when you take a look through. Labor shortages, here it really comes down to what you're paying out in terms of margin, what the folks make. You want to check into people's salary. Are they happy? Is everyone miserable? If you can get in front of any employees and kind of interview them or talk to them, just get a basic idea. It can be kind of hard because the seller is selling to you, so they don't necessarily want to tell everyone about that right away. But down the line, as you get under, an LOI, possibly you might say, hey, can I talk to, the team and as we do the transition agreement. And here, post, you want to look at the labor market. Labor market's been tough. This has been a big category for a lot of people. And some of these sellers in the SMB market are just selling because, all of a sudden labor is expensive. And if that's the case, okay. But, from their perspective, on the labor shortage stuff, everyone's feeling it. Inflation's way up regardless of how you slice it. And, if you have folks that are working for you for an hourly wage and they're working really hard and then they're busting it, you might have to give them raises to keep them happy post-close because they don't know who you are and you want to make sure everyone's happy. But then all of a sudden that can hurt your margin and then the business might not work, right? So you want to consider all of that. I've heard a good few operators talk about, day one, just offer everyone either a raise or an incentive package type bonus for a year out to get everyone on board because people like to get paid. But for you, make sure you can do that and also make the hires. And if you talk to the folks and like, look, I'm working 3 jobs, I'm miserable, you don't have a problem because everyone might be at this company might be well underpaid. Now, I'm not saying this company is specifically, but that's something to ask as you're going through due diligence. And then public health concerns, there's additional costs after COVID for some places with washing your hands and stuff. And I'm a big wash your hands guy, so I'm okay with that. But just keep in mind, things like that can change the cost you have when you're running a company in this space. All right, 3 more sections, and then we're done for today's. So licenses and regulation requirements. Here we like to highlight all the stuff that you should probably know about. And this can be all over the place, but some things here I'd focus on: a business license or whatever state, California. You got to understand the rules and regulation changes from before. We mentioned like the labor shortage. For instance, California passed a law a few years ago that, contractors have to be full-time employees. And that's really impacted a lot of businesses because before you could pay someone a contractor, now you have to pay them their full salary plus benefits. It changes the economics, right? So, you want to check into the business license and changes regulatory in that state that you're buying in and get smart on it. So if I'm moving my family from Denver to California to buy this company or something, I want to make sure I understand how that business operates, get a business license to start. You need a health department permit. So all these permits and licenses, if you do a deal that's a stock deal generally transfers everything over in kind. We have a post about that in the legal section. So if you do an asset purchase, which is also very popular in the space, you have to reapply for all this stuff. So that's something to keep in mind. So if you need some of these permits and you're doing your weighing between what kind of way to structure the deal, to definitely consider that. Sellers generally like the stock sales because it's quicker, easier, and there's tax benefits for them. And buyers typically like the asset purchase stuff from the lawyer's perspective because you can limit, the liabilities you have in the past. either way, your reps and warranties on your final purchase agreement will go through a bunch of that stuff, but just things to consider. If I can't get a health permit through the California license for 12 months for whatever reason, I don't want to buy this company and then day one have no license. I can't operate. So that's a really important thing to look through. And that's why we kind of highlight this section. Environmental compliance letter. So you need a letter from the state or local authorities involved in waste management for handle of disposal of human waste. Human waste is, as we said, it's kind of toxic. Employment identification number. That's pretty standard. It's a tax ID. Commercial vehicle registration. Using all these vehicles to drive around these porta potties, you got to make sure they're registered properly. Waste disposal permit. This looks like a permit that you have to get. And again, these are all industry specific things that the AI is pulling for you that you can kind of look into. Some of these are valid and some of them, not as important. But these are all pretty important so far, obviously. So you have to get a permit for disposal in California. Insurance policies. This is for general liability. So if anything goes wrong, if someone crashes a truck, if a porta potty falls off a truck and hits a car, if someone slips in a porta potty and sues you, whatever it might be, this is covers a wide variety of stuff. And if someone gets hurt on the job as well, so definitely gonna need insurance day one. You want to understand what the prices are, and specifically in California, are they going up? Where have they been? Could that impact your overall calculations? Contract agreements. So you have service agreements with all these different folks that you're dropping off porta potties to. What do those look like? Do they need any work? Do they need additional legal work? Is the current seller doing handshake deals with folks, or are they, do they have properly written stuff that they've used forever and is standard? Just, look into your various industry. Site access permits. So if you're putting on a public property or private sites, you might need a permission through the local municipality. So this kind of goes to the government clients, right? Oh, great, I have a bunch of municipality rented porta potties. I have 3-year contracts. But if I don't have access to drop those after I take over the deal, they might say, well, you don't have a permit anymore. And it takes 6 months to get it approved. And, we're just going to go to this other porta potty company now because we need a porta potty at the park. And that could, there's a big customer you just lost. And then training certifications, any training certifications you need to get from the owner, they'll be in a transition probably. So sometimes what you can do is, slightly borrow their training permit while they do their transition agreement. But, you want to look into what specifically for porta potties you need to handle all this sanitation and waste management, right? And again, here's some great articles here to read through, look at permits, understanding licenses. And that's why the AI is a great place to start. It's like having an analyst, which is something, because I used to do all these for the seniors, and now they're just done by a robot, which is cool. Top 10 failures. So this is top 10 reasons for failures. This is after concerns and requirements. This is like, what can go wrong that I lose everything, that I get a donut and it's 0. So regulatory compliance issues, you fail to meet health and regulatory. Let me just do a little thing so it's cleaner. Whatever, I'll do it later. Right, so regulatory compliance, you want to meet with health officials because if you don't, if you get legal fines, operational shutdowns where you can't operate in a certain space and lose a big contract, that's a possible reason. So all of a sudden I have this construction site that's doing 10, 20% of my revenue and I can't operate there, or a park, I'm in trouble. Economic downturns, again, this goes to the revenue mix. So if you have construction and event sectors and they really, really take a dive, then you can be in a tough spot. If you're a municipality that has a 4-year contract, it's a little bit less, right? So it really comes down to revenue mix here, but something to consider if you're really heavily construction and these folks just do 6-month contracts instead of 12 or 24 months, which would be better, then, or 3-month things where they're really short term, then you could be in some trouble. If, for operational efficiency, if anyone leaves or a key employee leaves, competition, all of a sudden, you buy this thing and Johnny Porta Potty's down the street has been waiting for, Rick to leave this place, whatever it looks like, or Amy, whoever runs the company. And, they take all your key players day one, and all of a sudden you can't pay your debt service in day one, declare bankruptcy. That can absolutely happen. Dependence on key clients. Again, if one of your clients is over 40% of your revenue and you still get it through the lenders and everything's fine, and day one they leave, can be a problem. Seasonal demand fluctuations. It can be hard if you're really seasonal. Again, back to that summer example, summer porta potties, if you can't get the right labor in place, Labor shortages, again, if the team walks out on your first day, if you can't bring in new people and you can't deliver porta potties, it can absolutely, lead to a failure. And, you see some kind of redundancies here with, environmental concerns, public crisis, et cetera, we've already talked about. So the last thing here, just to finish up, is the top 10 operational items. You want to learn about regulatory stuff. You want to learn about operational efficiency. You want to dive into the market. What are the competitive dynamics? What are your service offerings? How do you evolve in the market? Can we get a little more municipality revenue? Can we get a little more long-term construction? That's all important stuff. Inventory management. How do they manage their inventory? There's $1.5 million inventory on this deal. How do they manage all those porta potties and track their fleets and look at their trucks and all that good stuff? CRM, who's your customers? How do you get in contact with them? Is it organized? Is it all in the seller's head? What does that look like? It's very important, obviously, for a lot of businesses to have a good, strong CRM and know who they can target and who their customers are. Financial acumen. So just looking at who's going to be sort of your CFO. Are you very financially sophisticated, or do you need outsourced bookkeeping, which you can but you can get through really strong CPAs in this space, right? So think about your team. Are you going to be more on the sales side? Are you going to be, driving operations? Maybe you need some bookkeeping outsourced CFO. You definitely have room to pay for one with, $1.7 million in cash flow. Staff training and development. You want to go into a deep dive for yourself on what the current training standards are, high service standards, safety compliance, effective customer interaction. How do we close a customer? How do we onboard someone? How do we deliver a porta potty? If a porta potty breaks, what's our response? All that good stuff. Technology integration, we've talked about a few times. Marketing strategies. How do you target certain markets and what's your outreach, right? So I don't want to skip over technology, but like technology, if you think about it, it's, software for delivery apps. What's the cost? Again, you don't want to load up this thing with costs. A lot of times there's what they call a J curve with these companies. You'll take over the company and year one, you'll lose some revenue. You'll lose a customer. Maybe you might grow, but this is just your downside. And then you add some extra costs, right? So you add in a new CRM, a new software system, and some people go too far, right? And they really cut into their margins. You want to go kind of light if you can, but a few tweaks and a little bit of expenses for then longer term growth. So then year 2, 3, 4, as you get better at the business, a lot of operators figure out these companies in 12 to 18 months and then really step on the gas. So some of these things are worth it. Marketing strategies goes along with that as well. Are you going to do outreach? Are you going to do mailing lists? Are you going to join industry groups? How are you going to do that? For marketing strategies, we really recommend SEO. I mean, there's a lot of really strong SEO people out there, and that takes 6 months to kick in. So you want to plan for that. But, SEO tends to be an inbound sort of organic-ish strategy where you have to find the right SEO people. We talked to Striker Digital. They're good people. There's a few other in the space, but, Bodie over there, and they do a really good job and we'll have an interview with Andy coming up, but they'll do a really good job of getting you in front of people, right, in 6 months. So it takes a while for Google to pick up all your stuff. There's some short-term stuff you can do, but after 6 months, you have all this inbound phone call stuff that comes in that's kind of nice. Facebook ads over the top of that can work, Instagram ads and stuff like that, but you got to be careful. I kind of view digital ads as a supplementary to the SEO, and they kind of package that together, but if you're doing just Facebook or Google outreach at first, you're going to burn a lot of cash. And, if you're running one of these things, I think the first 30 to 60 days, it's just like get the keys, make some basic changes, watch the business grow. Don't do anything for the first, 15, 20 days except help out. Let the people tell you what's the problems and then identify them and make some changes over time. So you don't want to be spending a bunch of cash in your first 6 to 12 months on stuff when you don't know what the ROI on that cash is going to be necessarily. This is not, a venture capital play. This is very much the company's growing at 3-5% a year. That's fine. As long as it keeps growing at 3-5% a year on the revenue side, you keep the cost down and you pay off your debt, you'll recognize a really, really nice return for your investors, but also can unlock, kind of a life-changing amount of money for yourself in terms of equity value, because all that debt then becomes your ownership in the business. And then sustainability initiatives. Like I said before, there's probably some cool stuff you can do with, all the green stuff going around. And also, if there's like disaster relief stuff and you're the disaster relief porta potty person, that could be, really fun. I mean, that's giving back with the business in a time when people are in real need, and that's cool. So if you want to pair some of that stuff on the back end, you can make that a part of your overall, operational plan. And then just our disclaimer. I mean, read through this. This is created by AI. This is hypothetical and illustrative only. Please do your own research. This stuff is risky. This communication has been prepared for you folks, and it's not tax advice. It's not legal advice. It's not investing advice. This is for informational purposes only. And this is really just my view on how to read through and make pre-LOI investment memos quickly and effectively for folks and put it in front of yourself, right? So if I can populate, this page in, maybe 10 minutes now, it took me 40 minutes or 50 minutes to read through everything, doing, a full review here. But if you want to click around these faster, you'll get faster at them. You'll get more information. You'll start to see some of the same themes with these businesses, and it'll really speed everything up instead of sitting down and typing out, 14 pages of research like we used to do. Again, if I do a handwritten investment memo, is it absolutely better than this? For sure. And, there'll be a lot more detail and stuff, but the AI does a fantastic job of really diving into a bunch of the initial stuff for you when you're in this pre-LOI phase, and your goal is to get into as many companies as possible. So feel free to reach out, and that's today's After the Review.